Thanks for tuning in to the Stocks to Watch segment. There are a bunch of them that will react. We try to choose the ones that we think will react the most. And let's get in Avinash Gorakchecker with his thoughts on each of these names. And Avinash, I'll cut straight to the chase. Good morning. Good having you. The SGX Nifty is likely to start off about 0.5% or slightly more than that lower. In light of that, what happens to some of these which have come out with a slightly patchy set of numbers or announcements? Let's start off with Bandhan Bank, which has that big block deal and which is being done or which could be done price substantially lower than the current market price. What happens to Bandhan today and over the near term?
Good morning, Neeraj. I think Neeraj, Bandhan Bank, offer for sale of almost 20% of the equity is definitely a large block, and one could see a slight negative reaction in the initial opening trade. As you rightly mentioned, the price is significantly below 8 to 9% discount to the current market price, and I think in the very near term, one could not expect a significant rise, considering the fact that of course, moratoriums have come down from almost 90% to 24%. But the first quarter numbers which have come out clearly depict the fact that there has been a significant improvement over the fourth quarter. And I think some negative headwinds which would continue to walk down Bandhan are the floods in Assam and Bihar, which are going to obviously mar down the performance in the coming quarters. I would believe that this 20% block deal which happens today is going to be watched very carefully as to which large institutional investors actually pick up the stake. Possibly by evening or by tomorrow we could come to know the names, and I think based on that the markets could possibly give it a kind of a thumbs up. Possibly considering the fact that this was definitely bound to happen, but at this price, definitely it's a big disappointment. It does not impact the company's financials as this is a kind of a stake sale by the promoters. So overall, I would believe that yes, longer term prospects are good, but FY21 could be a challenging year. I think whatever growth we could look at Bandhan could possibly only from FY22 onwards. So it's a hold. I wouldn't suggest to buy at the current odd levels and wait for the water to settle down before taking a fresh call on the stock.
I mean, you wouldn't buy even if the stock slides down to that price, you wouldn't be buyer then, right? You would wait.
I would prefer to wait. In fact, clearly, I think numbers would improve going forward. But I think even the coming quarter, the second quarter, Neeraj, is going to be a challenging quarter. And to that extent, I would not be surprised that around 300 or maybe slightly below that, one could see a possibility of this stock coming off. And this is a large deal, so I think it's better to wait for this deal to culminate and then possibly take a fresh call.
Okay, fair advice, Avinash. Thanks for that. The other one, Avinash, was this trend that we are seeing in these stocks which are doing the pathology or diagnostic companies, right? Dr. Lal, not the best of quarters. Thyrocare, a terrible quarter of sorts.
Yeah.
What's your sense on these stocks?
No, I think Neeraj, these stocks were already trading at very expensive valuations, and I think despite the fact that both these players are B2C players, I think the lockdown for April and May has affected numbers for Dr. PathLabs as well as Thyrocare significantly. In fact, if you see the numbers closely, Thyrocare has been affected even more badly. If you look at their bottom line, it's hardly 23 lakhs. Compared to 27 crores. And if you look at Dr. Lal PathLabs, I think disappointing quarter because EBITDA margins have contracted from almost 28 to 18 odd percent. I would obviously look at the fact that June has been a good quarter. June has been a good month for both these companies, and obviously the second half could be better. So maybe in the very near term, these companies may not go anywhere. Thyrocare definitely looks a little more expensive based on valuations. But Dr. PathLabs, if you get a chance, maybe if the stock corrects further, it would be a good opportunity because it's a great franchise, a zero debt balance sheet with almost 800 crores of cash in the books. So I think these companies definitely would pick up gradually, but obviously from the third quarter onwards. So net, I think good business, but current valuations seem to be slightly, pricey, and I would prefer to wait for some time.
Okay. Avinash, the common refrain is that all auto sales have done much better in July compared to June, so there has been a bit of a rise. But we also know that there is a issue when it comes to the lockdowns, right? Because the lockdown is sporadic, it's happening across the country now, micro lockdowns of sorts. What do you make of the auto sales numbers? Is there any of those auto sales numbers that surprised you so positively you might be inclined to take a fresh long? Conversely, is there something that disappointed you so much that if you had in your portfolio, you would get out of this stock?
In fact, Neeraj, if you ask me frankly, because of the low base in the month of June, I think the percentage number looks pretty high on a percentage basis. But nevertheless, if you see the numbers, I think one thing is very clear that some sort of recovery has happened in wholesale numbers. Maruti has reported a 88% increase in the month of July over June. The big positive surpriser has been, Mahindra and Mahindra. If you see their automotive sales, they are up by 32% on a month-on-month basis. The tractor sales have obviously done very well, almost 28%. I would definitely look at consistency in these numbers, and going forward, I would believe the second quarter could definitely be a lot better than the quarter one, and hopefully recovery should happen from maybe October November onwards. We are yet to enter the festival season. Within the automobile companies, we still continue to be positive on Mahindra because we believe that looking at the tractor market, which accounts for almost 50% of the top line and EBITDA, this could be a positive surpriser in the market in the very near term. As far as Maruti is concerned, numbers have been good, but valuations still seem to be quite pricey. So prefer to wait for some sort of correction there. And the big negative surprise has been Tata Motors. I think despite the fact that most of the analyst community is positive on the stock, I think free cash flows continue to be significantly weak. Recovery at least for FY21 is ruled out. And I think unless they reduce debt on the books, Neeraj, it's going to take a long time for the stock to get re-rated. So I think the only positive surprise could happen if the passenger car business is demerged and some sort of value accretion happens there. But I think net Tata Motors has disappointed.
Okay. So net Tata Motors disappointing, Maruti expensive despite good numbers. Mahindra and Mahindra is something that Avinash likes from the monthly sales perspective because they've done well. Mind you, VS two-wheelers like Hero MotoCorp and TVS too did reasonably okay on the monthly sales front. So keep those at the back of your mind. Avinash, I want to wrap up this segment by asking you one quick question on something that came out with either news or results over the weekend, which stood out for you. Maybe I didn't ask you, but it stood out for you as a stock that could react.
In fact, Neeraj, we have been quite positive on some holding companies, and within
Mm-hmm.
holding companies, we like stocks like BBTC, which is Bombay Burma Trading Corporation. I think the markets have given it a significant discount, almost 70 to 80% discount. I would believe that Britannia is a very strong holding. They also have a large exposure in Bombay Dyeing. Looking at the fact that consumption is going to take off even in the second and third quarter, we saw very strong numbers from Britannia. I would not be surprised that at these levels BBTC appears to be extremely cheap. And despite the fact that it's a holding company, and even if you give it a 50% discount to the fair value, I think you could get a significant upside of almost 18-20% here. So Bombay Burma Trading Corporation is a safe bet in this market where the risk reward is in favor of the investors.
Okay, well, we got a stock idea too today, so that's the other interesting bit. Avinash, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Stay safe. And viewers, I forgot to wish everybody earlier, but wish you a very happy Raksha Bandhan today, of course, and have a good, profitable trading day ahead.